You're trying a bunch of different strategies and nothing seems to be working. Let me break it to you. Your strategy doesn't really matter. I've devised a strategy called Dumb Money Concepts. It is a play on smart money concepts. It's so incredibly simple to follow, and it's going to allow you to focus on what actually matters in trading. As I just said, you tried a couple different strategies, nothing seems to be working. It's because the strategy is not that important. This is going to be a simple set of rules that does work for sure. Then you can focus on your internal discipline. The problem that most traders have when it doesn't come to your mindset and psychology is you're either drowning in information. This is why I say ICT and SMC doesn't work. This is why I say all sorts of strategies do not work. It's because there's so many conflicting points of views and so many things that can mess you up. So we must simplify it. Or two, you have no plan whatsoever. And when you have no plan whatsoever, you don't have targets, you don't have exits. So again, let's make it super simple. Let's jump into the charts. I'm gonna show you your strategy right here. So like I said, this is the entire strategy. It's a very quick PowerPoint, guys. You make it super simple. You don't use any indicators and you follow one little thing. And all that little thing is, does it gain, does it lose a level, or does it fail to gain or lose a level, right? So what do I mean by that? This is the entire strategy. We have a key point, right? Wait for the price to hit that level. You then have a wick or an attempt to pass it. You have an attempt to pass that level. You fail to. What happens next? Boom. Close back within the range. Next, price reverses. Where does it reverse to for sure? It reverses to the origin of that move, right? So just because this continues down doesn't necessarily mean that we're going to trade that whole thing. We only know the next move, and we're going to simplify that so simple that you could have just instantly shorted there, right? That's it. That's literally it. So by the end of this video, we're going to jump into identifying levels, determining the trend, entering and exiting, and your risk management. It doesn't really matter because you're going to be right. So let's do it. All right. So when you're identifying levels, let's start off on the higher time frames, right? You can use the monthly. Very often you'll see the monthly levels here. So what you want to do is those untested candle bodies. And as you can see, hey, we have a level here. These levels are very obviously going to be pivot points. You know the untested monthly levels are going to be bounced off of. It happens for sure. Okay. You just don't know how far. So you see there, that also lined up with a weekly and then bounced off of it. You can also see, hey, we have these weekly levels. So this is your first bet, is draw out where are these weekly and monthly levels that are untested, okay? And then you kind of have a range of where you're going to be able to blindly enter on some trades, right? And we can go back down to the daily and you can see, hey, higher time frames. These are going to be super important pivot points, right? So as we pass this level, this is called a pass-through level for me. We can identify that level as well. And we can identify the upper side level as well here, right? So we have a couple recent levels. So what's the difference between a tested and an untested level? Well, if you go back to the weekly, you can see, hey, this level was already tested here. And when it tested, you failed to go below it. So using this logic that we just explained at the start, we failed to go below that level. So what did it do? It goes back up to the origin of the move that brought it down, okay? And you can see, hey, we went right to that level before coming back down. And once again, testing this level that was then created later. We failed to lose it again. So the next move back up is going to be back up here, okay? Back to the origin of that move, and we have to retest that level again. Once a level has been tested once, it's pretty unlikely that it will hold a support unless a new level was created there. So you can see here, this level tested and bounced off of this level, and this level tested and bounced it off this level. Usually, if you can see here, this level was already tested, and when we came up again, it went past it and went to the next level behind, okay? That's how we identify important key levels. Next, we want to determine the trend. Now, trend doesn't really matter that much. All you really want to know is what is the next move, right? We can use trend to make it more likely that our moves are going to be correct, but the reality is, hey, if the trend, let's call this a trend, on the higher time frame is bouncing off of that, and we say, hey, it's probably going to be coming up here because we know the next move of the weekly, then most likely the trend on the 4 hour is going to be following that, okay? So you want to be looking for trades within that next move. So I'm only saying the trend as the next higher time frame move. I'm not identifying trend the same way as other people do, where they say higher lows and higher highs, right? It means an uptrend, right? We're not doing it that way because that's a silly way to judge it because you don't know when it's going to turn. We know it's going to turn up here. So this is the move that we're trying to satisfy on the higher time frame trend. So just to be clear on that, our trends don't really matter. What we're looking for is the next move. And when we're looking at the higher time frames, the next move is a much larger move than the moves on the lower time frames. So everything ends up being a fractal of each other and they start cascading into each other. So the trend on the lower time frame is going to change first and then it's going to start cascading into the higher time frames, thus making the higher time frames change later. But overall, if we're trying to find the trend and make things most probable, we want to look at that major move on the weekly, daily, and monthly levels, and then take trades intraday based off of that direction. Okay, so the next thing I want to illustrate is we've already determined that, hey, when we have this failure to lose a level, we have the failure to lose a level right here. We already know that it's going to go back to the origin of this move, right? We already know that that's going to be happening, right? Before it comes back down. But what happens when, you get these closes instead? These are basically the same thing. We have a regain of this zone. And when we regain a zone, which is essentially the same as having a wick, because this is an attempt to break that level and you've just regained it really quickly, or we can lose the level and then regain it, okay? So now that we're back in this zone, it's more confirmation that we're going to be targeting the other side of that zone, okay? A perfect example here is you lost this level before, and then when you came back in and you regained it, you gave a little wick test here of the level before targeting the other side of that zone. It ends up being the exact same thing as a wick. As you can see here, you can see the wick, and then you have to target the other side of the zone. The wick is just a more momentous move. This all goes under the guise of what I am determining the trend or the next move to be. Entering and exiting trades, you have a few different options. We have the option of a blind entry where it's an untested higher time frame level, which we already talked about. You have the option of waiting for confirmation of a bounce off of that level. And you have the option, which I used to use in my previous lessons, which dollar cost average, which allows you to get the best possible price without really knowing what level it was going to be. Each of these have their own drawdowns and each of them have their benefits. So let's look at it. Entering a blind level, where you'd want to be entering a blind level is essentially a untested daily, weekly, monthly, like higher time frame untested levels. These levels pretty much always get some sort of reaction off of it. Let's even just look here. Like I have a blind level right here, right? Let's look at see like what sort of reaction that happened. Even just this looked like it didn't even bounce off of it, right? So sometimes you won't get a reaction, but you can literally see here, there was a reaction when it first got to that level, and it was a pretty solid reaction. So you could have just entered blindly here with a pretty decently tight stop, and then all you had to do was target the next level up. So you will 1R sort of setup here. You could have taken quick little scalps there, but if it did happen to dump through it, this would have been a decent amount of drawdown that you probably wouldn't want to hold through. So those blind levels are best when they're used on higher time frames, and you just go for quick scalps. Now, where you'd want to wait for a reaction would be maybe lower time frames to see, hey, like I probably wouldn't be looking to blindly enter on this level here on that 4 hour because it's a bit lower, but I can see a reaction off that level and we can see the wick. And then from there, what you'd want to do is you'd wait for a retest of that same level, and then you would get in and you would short, right? With a stop behind wherever, and you again target the other side. Now, if you want to watch in detail and get my exact stops, my exact take profits, jump into the Discord, jump into live streams, because I'll show you exactly where I'm placing things. This video is not long enough for me to tell you all of the nuances of everything I do, because this strategy is very, very good, okay? Like much better than what you're going to get out of this video. I can get like a 90% hit rate with what I'm doing, which I can't explain in a 10-minute video. Again, everything is always free. I will never charge you for lessons. Nice. So for the third option, you can do a DCA sort of strategy. And a DCA strategy is good if you don't really understand what you're doing. Honestly, I don't use it as much anymore, but sometimes if I have a zone that I'm looking for, let's look at Bitcoin recently here for an example, right? If I have a zone on this higher time frame, and it's basically the same as a blind entry, except you have multiple entries, right? So you have a big zone here. I'm going to draw, like you can see the zone on the monthly here. So when I entered Bitcoin, what I did is I DCA'd at 70K and I did 60K because that's the zone I wanted to enter on. So I did one at the top and one at the bottom. Now what you can do here is you can average out as it comes back up to make sure you get a really good entry so you're not over risking. Let's break that down in further detail just so I can show you how you'd be exiting if you're, over risked in a DCA. So in an example like this is if I entered here and I entered here, this is a support that's turned resistance now. What you do is you buy here and then you exit there the first trade at break even. So that way your first position, you only have one position and it's really good entry now, right? If it continues to drop lower, you probably would want to exit that trade because this was your zone. I don't want you to just keep DCAing as long as it's running and martingaling because that's going to ruin your account eventually. A really poor risk management. So as for exiting, you can either average out the same sort of way I was telling you here, or you can simply do the next swing high or a important key level. So the exact same way you're going to enter is going to be the exact same way you're going to exit. Okay. So if you have major time frame levels, right? Say I have one here, I probably want to exit my long right there because that's a pretty good spot where I think price is going to reverse at. Or I can target new highs, and it's going to be dependent on each situation, but you're going to want to shoot for maybe 1.5 R per trade, and you can justify where you want to place it based off of that. Also, if you're entering off of a weekly candle here, it's maybe not a good idea to exit on a daily. You might want to exit on the new high because you are trading on the weekly time frame, and that might just be a short little bounce off of it. But use your best judgment, okay? One more thing is if you are trading and it tells you that the trend has now shifted to the other way. So let's say we were bearish here, right? Because we had this wick on that level, right? And we sold, and let's say we were targeting this low instead of that level, and they failed to make a new low. Now we should exit, because most likely what it's telling us is the trend has now shifted and it's coming back up here. So it's very likely that we get stopped out of that trade and we can just re-enter later, because we don't want to be attached to any trades. We can just jump in and out, no problem, because we're always just looking for what is the next move. And if the next move is going against us, we don't want to be in that. As for risk management, how much should you be risking? Make sure you feel uncomfortable while trading so that you can practice your emotional control, but not so uncomfortable that you have to look at the chart. Say that again. You want to feel a little bit uncomfort when you lose, like, let's say $100 is a decent amount for you to lose. I want you to bet $100 then, but I don't want you betting $1,000, because then you have to look at the chart constantly. If $100 is not a huge deal to you, but it kind of sucks, that's the perfect amount to bet. Stop losses, I don't really use them too much, but the stop loss I tend to put behind the next level behind. So that way your risk management, you still have it there just in case something happens. But this way it allows the option for the market to stop out the other guys without stopping you out. So if you have a level here that you want to be out at, I'd put my stop loss at the next level behind instead of that level. And then one final thing, don't use martingale. When I told you to DCA once or twice, not more than that, okay? I think that's all, boys. Follow the live streams, join the Discord, a lot more in detail here. I'll review your trades, whatever you guys want. I'm here to help, okay? Thanks for watching.